because we do have a finish. The other thing that we have, I want you to pay attention to, and this is, has a lot to do with structure. We have a pretty nice, very quick, small volume distribution here, but we're building out volume pretty strong right here in a very short amount of time. So what this is inherently telling us is that, in fact, we have sellers, we have buyers who have kind of, I don't want to say left the auction, but for right now, they seem to have left the auction. The fact that price really isn't moving higher on all of this additional volume suggests that there are more sellers, more activity at the bid, actually stepping in. And now what I would want to look at is a potential move back down to this level and this 16. Actually, it's 17 quarter. So let me get rid of that. Yeah, right down here. I want to see a potential move back down here. And this is really where I want to see what happens at the print. So this structure in the volume profile with all of this volume building, I mean, look how much time and activity it took to generate this much volume. And this has built a significant amount of volume in a very short time. The only way that that can happen without price continuing to move up is if there's a potential change in sentiment and sellers are holding buyers. It's the only way this volume could build out like this. Because if this were still aggressive buyers and not passive sellers holding the buying, then the price would continue higher. The fact that we have a relative decent finish now to the upside, and then when you look at the print, weakness at the offer, weakness at the offer, we're getting a strong probe to the downside. We came through 1975, and now looking for this level 17 quarter, 17. I want to see what happens here. If we get a strong bounce off of 17 quarter, then I would tell you the target to the upside is going to be 27.50 and 30. So looking at the print, it starts to confirm for me what I'm seeing in the volume profile. Right, I'm seeing not much movement in terms of price. I'm seeing volume coming into the market, which inherently, this automatically to me means holding. Sellers are holding buyers. All right, if sellers are holding buyers, then I have to ask myself, if that's the case, where do I expect them to take price? First place is right here. 1975, the print suggested that price was still coming. A lot of strength at the bid, price was still coming. Where's the next place? My kind of moment of truth is either here or here. And that is 1775 down to, say, 17 quarter. Now, we have a scenario here where we might see price ending its move lower. So I keep watching the print. I see weakness, relative weakness at the bid. Strength coming back into the offer. We're not quite down to the 17 quarter level. But the print right now is supporting along here. Now here's the issue. And this I will tell you that I struggled with personally for a while. And it may be an issue for all of you too, just simply because of your current trading habits or practices. The trade that I really want is down here, 17.50, 17 quarter. But right now the print is suggesting that this level here at 18, which is also supported in this low volume area, may very well work. But what I have to inherently understand is that We were trending up pretty well. We've got a finish to the upside. Weakness, weakness, weakness. The print is saying I should be looking at a long right now. But my level that I'm looking for this to come back to, my best trade scenario is 17, 17, 50, 17 quarter. The print is saying weakness here, strength coming back into the bid, go long. But what I know is that if I go long right here at 1875, there is a potential that I would need to carry that trade even before I knew I was wrong. I would have to carry that trade almost 2 points. And so the print is telling me yes right now, and I understand this is just a moment of time, but my trade plan, my if-then scenario is if price comes back down to 1750, 17 quarter, and I get weakness at the bid and strength at the offer, then I will look at a trade. So my developing trade plan, and now we got weakness again down here. I think this may just start to pop now. We're a little closer at 18, and this is where it can get a little bit not touchy, but this is where you have some shorter term volume profile, kind of giving more weight to the longer term area here down at 1725. So this may have been the better opportunity here at 18. What it does for me at 18 is it only puts this 3 ticks away. So now I'm only looking at maybe a point and a point and a quarter stop instead of a 2-point stop. And from a risk reward standpoint, that makes a whole lot of sense. And in my trading experience, it is worth the wait. It is also worth not getting the profit, because I also know that I can get another trade yet today. So I am a risk manager first. So even though the print initially showed an opportunity up here, 1850, 1875, the trade that I wanted based on the auction, and this is a low volume area right here at 1775, that's a better trade. Also supports this from the high of day yesterday. That's a better trade down here than up here because it's closer to my stop and I can manage my risk a little bit better. So I waited, knowing that I might miss the trade. All right. Am I looking at the finish on the 12-4 chart since it looked like a nice finish on the 6-4? Yeah, I can do this pretty quick here if I want to see the finish to this. It doesn't matter where I draw this. Here's the 6-4 chart. I can see a pretty nice finish up here. I'm looking primarily at the last 3 to 4 bars. It doesn't have to be a complete stair step up. You'll see volume at 2175. But what's interesting about this, and taking only this snapshot of the volume profile, is what do you see if you were in a long and you just took this profile from this breakout here on up? What you see is a low volume area starting at 1950 all the way up through 2050. So since there's a finish up here to the upside, and as price was moving up and down, as part of this profile right now, I can see a low volume area in just this activity. If I were to get long here, then this profile, this is why you do different profiles. You want to look at a profile for different time frames. Remember I talked about a swing high and a swing low, so this would make sense. Price would really need to get through 2050 now, 2050, 2075, to give you an opportunity to potentially take this trade higher today. But this represents a potential, I'm not saying it would be, but this represents a potential area where we might see some issues for buyers. if we're going to see a little bit more here. But it's an area to be watchful of. Again, the print is showing at the bid weakness, weakness, weakness. We had what we see in this is we had strength back down at the offer here. Good strength, really good volume back down at the offer here. Right there at 1919. So a lot of, call it support, whatever you want, but a lot of buying activity at the offer between 1850, let's even call that up to 19 quarter. So what we would want to see if we were in the long is we would want to see continued strength at the offer at 1950, 1975, and what we don't know, and this is the hard part, what we don't know is if we're going to get that strength, if we're going to get strength at 1950, 1975. And this is what I mean when I say that the print is truth. Right now it doesn't show it. All you have to work with to manage your trade is what you have on this screen. You can't assume anything. You can't project anything. This is your truth, so to speak. So we're in this trade, you're watching, you want to see strength, which we're getting back at 1950. So this is in this trade, and again, I can tell you this is I'm a trader before I'm a trainer, and if I start getting into this trade, and you'll see this tomorrow and Friday, start getting into this trade, I'll talk through it, but I really focus on these numbers, and you may hear what sounds like distraction because I would be distracted. So what you'd want to see in this trade, again, is strength coming back into the offer, which we have. You're good, you're good, you're good. As long as there is weakness at the offer and strength back into the bid, you have to say to yourself, you have to be objective and say, there's additional risk. There's additional risk in this trade until something changes. So that's, we see strength at 20. We want to see strength up through 2050. We want to see strength up through 2050. At that point, we're likely to come and test at least 21 quarter. Why? Because even in this really small distribution, that's still the highest volume point. While it's not the volume point of control, this is where the trade is happening right now. Remember, I default to the most current context because that is what buyers and sellers are actually doing. I default to the most current context. So what I need to see now is I need to see price get through this. The only way it's going to do it is if there's significantly more activity at the bid. So I'm using this very small intraday volume profile to help me manage this long. And what do I see? Weakness at the top here at the offer. What's the result? Now I'm getting buyers who had some conviction here and here, right? See the conviction in the buying here? Look at that. Now they're stepping aside. So if I'm long down here off of this level, say I'm long 18 quarter or 1850, how am I feeling about this trade? And that's why I tell you that when you get this kind of, you have a scenario where you got a low volume area above you, you got a nice finish to the top, you need to let the print dictate your scales. I got a neutral auction relative to the volume cluster. I can see a little bit of battle going on here, buying, selling, neutral. This market is in a little bit of flux. Once I got this combination, the weak, and this is I think what I said before, is as soon as I get weakness at the offer and strength at the bid, I'm scaling. Because I don't have any evidence right now that this is unfinished to the upside. And the only evidence I have that it could potentially retest that area is if it gets through 2050 and starts showing strength at the offer back at 2075. If that does not happen, then my trade continues to be at risk. Will the trade work? That's just it. I don't know. Nobody knows whether or not the trade will work, which is why I rely on the print to tell me when I need to scale. Now, it's awesome to be able to get into a trade and just hold it and let it run, let it run, let it run, and take 6, 7, 8, 9, 10 points, and you can stand back and feel like, you know, the king of trading, and you know exactly what you're doing, and you read it right, and oh my goodness, aren't you wonderful? But the reality is, this is I get back to your trading objective. You are a risk manager first, and you should be trading to a specific financial objective every day. That could be $400, $200, $500. And when you pay attention to the print and you take your profit when the print says, I'm kind of done here, and you know that there's nothing supporting a potential return up here, plus the fact that now you got to get through 2050, and this says, no, we're done here right now. That says take profit, take profit, take profit. And that's the objectivity that you have to have. When you can start having that kind of objectivity, then, so put it in a baseball analogy, I hope this makes some sense. You know, it doesn't matter if you get a home run in an inning, because a home run can be just 1 point. But if you got a bunch of hitters on your team and you can get hit after hit after hit after hit, you can still score a whole bunch of runs and meet your objective. And a lot of hits will still get you to your objective versus a couple of home runs. And when you're trading to a financial objective every day, then trading objectively like this allows you to take away your pride of trying to get that big run and that big trade and take what the market is giving you, because then you avoid this psychological setup. All right, my trade hits, I'm in 1825. Yeah, it's working, it's great. I'm looking for price to come back up here. Uh-oh, it's coming back down against me, Uh-oh. Okay, I'm going to give it a little bit more room to work. Where am I going to let it work to? All right, I don't want to see it under, you know, this low volume area here. Might as well give it back down to VPOC. Here's what I'll tell you is this thing comes back down to VPOC after failing up here. I wouldn't trust that at all. And what you're going to do is psychologically get yourself into a position where you're going to start moving your stop. You're going to take away from any profit that you gained in the morning, and your overall daily objective is going to be crushed. And you're going to likely walk away a very sad trader at the end of the day. And even if this trade at 1825, 1850, you only take, let's say you see this and you get out, you get a bad fill, and you get a point. And then you take the rest, you know, break even here, and you make $100 on that. And even if it takes off back to the upside and you could have made another 200 or 300, so what? There will be another trade, and you're kind of missing the point. The point is to manage your risk using the information that is most important, which is buyers and sellers. And yes, we use the volume cluster analysis, especially on trends and in rotations, and the momentum analysis to help us in our trades. We use those things. However, nothing is more true than the print, especially at a moment in time. So we did come back to where? I still want to see this at 17. Call me old-fashioned, call me stubborn, that's fine. But I want to see something that looks like this at 17 quarter 17. Good strength at the bid, at the offer. Real good weakness at the bid down here. When I look at this print down here, and this may have just been exhaustion to the downside, now I've got a scenario where I would look for a long here at 1825, and if I started getting any strength back at 18 at the bid, I would be out of the trade. But the thing that I have to look at, remember my story now, is I've got weakness, 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 weakness at the offer. in order to hold on to this trade, if this stays weak and price starts coming back down and I start getting strength at the bid, I'm done. For me to stay into this trade now, I need to see strength at the offer. Strength, and more strength. Let's see. I'm going to answer a few questions here. Question, so I would not consider taking a short until we got below 17 quarter. And that is relative. Yes. I would want to see 17 quarter, and then I would want to see price come back up and fail at 17 quarter. And then I would look for a trade at least to 15 and a quarter and possibly back down towards 12 and, maybe even down to this low volume area. But I would look for 12, 11.75, that area. So yes, that's one of my conditions for a short. So while, and this looks like it's moving up now, while I can see weakness at the offer here, and it looks like it's finished here. When I go back to my bigger picture, we're still into this upper distribution right here. And what I know is if I get into that trade, and it did touch 17 quarter, that was in my longer term low volume area, and I take that trade and we continue to get strength back in at the offer through these lower volume areas, then if this auction re-engages, let's say I take one off at 1950, we get through 2050 and the auction re-engages to the upside at the offer, back up at 22 to 2250. I'm feeling, we got a little bit of a low volume area here from yesterday, but I'm feeling pretty good about a next scale right in front of this high volume area of this distribution, somewhere around 24, 25, 24 level, and then possibly look to hold a final contract all the way up to the top of yesterday. I would look for it to come up and tag 2750 and again look for the top of yesterday. I would look to take my last contract around 2950. Uh, 1875 is the IB. Top of IB is in fact at 1875. You are correct. Initial balance, that's the first hour of trading. The high of the first hour of trading is 1875. So it could bounce off of VPOC, and I just say this from experience. One of my problems I used to have as a trader is the word could. And what I found is as long as I had the word could in my vocabulary as I went to plan trades, I would never be able to take a trade, or I would get out of trades without any good reason. But as long as I had that word in my vocabulary, I had very much difficulty in taking trades, because what I know about the market is that anything could happen. And so when I entertain could, I'm not picking on the word, but the word could, it's more of a mentality. It's part of the psychology of trading. When you entertain the word could, then every scenario starts to play out, and it freezes you and keeps you from making a trade. The reason I'm teaching this method of trading and using the volume profile and using the print is because it's the only real thing that you actually have to use to trade. And so what you have to do is look at the scenario and the context and say, what is the most probable thing that is going to happen? If price gets back above this level over here, what's the most probable thing? Well, given today's context, if it gets above 2075, 2050, 2075, then I fully expect a tag of 21 and a quarter. And now we've got the potential to re-engage this auction and move higher. And if that happens, I've got a next target at 24 24, maybe 23.75, depending on how aggressive I want to be. And then potentially all the way back up here to 29.50, 29.75.